Good evening, everybody. I'm Dan Hussey from Zaner Ag Hedge, bringing you our evening update for strategy of the day. We're taking a look at the market's reaction to today's planting progress report from the USDA. Not a massive shock to the markets. One moment while I actually bring it up myself. Not a massive shock to the markets, but a generally, I think what we'll see tonight is a pretty good response, though, from market price action. So remember, trading futures involves risk and is not suitable for all investors. Leverage can work for you as well as against you. And not everything I say today is a direct trade recommendation. In fact, it is just my own opinion. But if you want to discuss with me in more detail about how this can become a trade plan for you, or how some of the ideas we talk about today can be incorporated into a marketing strategy for you, feel free to give me a call, shoot me an email, or hit me up on social media. Leave your likes and comments below. I love your questions, love answering them for everybody, so please let me know what you might have to say. So today we had crop progress report out after the bell. Corn came in at 80% planted versus a 71% average. That was pretty much in line with analyst expectations, actually kind of towards the low end, I would say, of analyst expectations, which give me a hot second here and I'll bring it up here. So corn was seen at 81%, so slightly behind the analyst expectations. So, this could be a little bullish on the number. And we could see, a push here in corn above 322. Again, I talked about earlier today how a push above that level constitutes, I think, a breakout of the range for May so far, and certainly would pull up a retest of 330, which was the lows from April, the highs at the end of April there. And then after that, 340, the lows of March. And we'll see if the market can continue higher. So again, today we had that number come out at 80% complete versus 81 in analyst expectations. So moving on here, let's take a look at the soybeans. It's going to be a quick report here tonight. Expectations were for 56% complete, and the soybeans came in at 53%. So, and again, against the 38% average this time of year. Soybeans gapped up here today on the reopen. I think that is in response to generally beating or being slightly more behind in planting than what analyst expectations were. And that's a decent, I guess 3% isn't anything to sneeze at, but it's a decent look and a show of strength here. And again, move back up towards 860 to test the high end of the range, and the highs for May I don't think is out of the question for soybeans as we continue to hold and now make a series of higher highs and higher lows. This would be now the second day in a row of higher highs and higher lows that have been made so far on a daily candle for soybeans. Corn, this would be the third day. The second. If today goes above, it would be the third day. And last but not least here, wheat. Chicago wheat is down, testing below $5, could be breaking below a big trend line support. Today could have been a head fake, and we would need to really see, or yesterday could have been a head fake, but we'd really need to see today continue above yesterday's high and certainly get back above the 508 highs of the day before. That would be below the low that we, I guess the support on the chart down around 505, 506. Once we went below that level, came down, tested $5, dipping below. If we don't reestablish back above this threshold and really reestablish back above 510, I would say, this market is in dire straits, and we could see a continuation and a flush out in the wheat below 490, down towards 480 to 475, as we took a look at earlier today at some of the downside some of the technicals to the downside, which we'll continue to look at. There's of course trendline resistance against highs that hasn't broken. We continue to make lower lows and lower highs and a trend lower. But if we don't really snap back here in the next 24 hours, make this a true turnaround Tuesday, wheat is going to be, doesn't look good from a technical perspective. Spring wheat did come in at 60% planted versus 80% average with analyst expectations for the spring wheat was going to be seen at 60%. So right in line with analyst expectations. Obviously, this is Chicago wheat, but nevertheless, the wheat complex had some news today. But we'll see if we end up getting some support there. Really the one I want to see is soybeans get that follow through. Because now we've had a show of strength. If this gets faded and falls away, we have trend lines. We have kind of a series of higher highs, and really the series of higher lows are what are important to pay attention to for the trend higher. Because if we do go below those lows, that's where the support can break down, and we might turn over and be testing down towards the $8 area. So we'll take a look at some cash prices later this week. We'll take a look at some other things. If you guys have any questions or anything you want to see in these videos, I'm happy to answer them for you. Really would love to get your feedback on them, and leave your questions and comments in the place to do so below. And with that being said, everybody, I can be reached. Give me a call, 312-277-0110, at Daniel Hussey Jr. on Twitter, Dan SOTD on Facebook, and shoot me an email, dhussey@zaner.com. Love to chat with the markets with you guys and answer any questions you might have about marketing and how to utilize some of these technicals and charts that we look at in a marketing plan. So with that being said, everybody, check in tomorrow. We'll be taking a look at some of the option markets where some premium might be had and where there may be some maybe some low-hanging fruit to scoop up. But have a great night, everybody. I'll be back with you tomorrow and as price action develops. Take care, everyone.